Hello, everyone, and welcome to another Block Chat. We have another episode this year, second of the year, episode 120. Is it 27? I think. This episode is going to be quite interesting because we're introducing a new company that we're going to be working with. It's a company that's going to launch on the Launchpad quite soon, a company from Portugal. And with me is the managing partner João Costa, and Aliaj, who is the innovation and funding partner in the company. Welcome to the show. Really glad to have you here. I'm really looking forward to learning more about Flipstone, presenting it to our community. How are you?
Thank you,
Hello.
Dennis, and thank you for
Pleasure.
inviting us.
Thank you.
All right. Um, Usually when people are looking for new projects, and what they want to see, at least in our community, that's usually the case, is that they want to see what's the background, where do these companies, what have they done in the past? Is this a pure new startup, or is this a company that has a certain track record? And whenever there's a company that has a track record, it's also interesting to understand, what's the angle, why is tokenization something that all of a sudden has come in the frontal lobe of the strategy, and so forth. So I don't know who wants to go first here. Maybe just before we go and dig into those details, maybe both of you can shortly present yourselves, your background, expertise, your past, your business passions.
Very good. Alas, you wanna
Joao, you go
go
first.
All right.
Okay,
So first of all, thanks for having us. Go.
okay. Well, thank you. So I have up to date, I would say, more than 15 years in the C-suite corporate finance experience. I was a part of multiple startups, a part of multiple fundraisings in different fronts in the tech area, also in a bit less tech area. So I would say that I'm very, let's say, versed in finance, in planning, in funding, in structuring deals, and obviously also in investment assessment, where I kind of advise multiple companies. I joined Flipstone because Joao and myself go way back. Previously we cooperated in multiple different projects, and when he decided to start his own real estate development path, we cooperated from the start. I'm also an investor in the Flipstone, so we were kind of going back and forth, developing the let's say the business model that evolved to the current let's say the current way that we do business today, which obviously we found the most profitable. We went from renting and now to build to sell model. And now I'll pass to Joao, who can then say more about the past and recent developments.
Thank you. Alas, no. So quick introduction. I'm Portuguese, born and raised in Lisbon, but actually the last almost 20 years I've been outside, and I've been gaining experience across Europe and Asia in the corporate world, and with let's say tech on the side, up until I think maybe 6 years ago, where we did find a great, I think, business model and how we can disrupt a bit and look at the real estate in Portugal, a market that I know very well, and set up a team that can look at it from a different angle and can start innovating in a specific. I'm not going to spoil the rest of the presentation, but corporate people countries pretty much focus on go-to-market and launching business lines in different markets in the EU for two big industries: first applications, then consumer goods, but always looking at advising on investors, and now really making the leap from the corporate world, startups on the side, to scaling up. That was Flipstone maybe a few years ago, 6-7 years as a startup, and now really leading and full-time focusing on this business with the help of Ilas and the big team also behind. Yes.
So when you're talking about Flipstone as a business, what's the kind of one-liner, or what's the core premise of why would I invest with Flipstone, for instance? Let's leave tokenization aside. Let's just focus on the core.
Yes. So look, our vision, our mission, our purpose is actually, if you want, is that we turn urban challenges into prime real estate assets. In other words, we're trying to bring life back to abandoned places in the city centers, right? Years of living in capital cities across EU, Rome, Brussels, Madrid, especially in EU. You look around and you ask yourself why in a region where there's a living crisis, right, where there's lack of homes and there's a lack of supply, why do you see an old vacant building center for decades? Nothing has happened, right? So that was a puzzling question at the beginning. Why is that there, right? With a high potential, vacant, old, not used, really prime locations across Europe. Lisbon is not an exception. So that's a bit our tagline: turning these urban challenges, these blocked assets in the middle of the cities, into something of high value of the value that you can bring to investors, but also value to the community, that transform something that is old and not used into something that becomes an apartment or a house.
I'm hearing quite a lot about Portugal as a market in recent years, and you also mentioned living in Brussels. I just coming back from Brussels this week, actually, and even there's quite a lot of interest in Portugal as a market. Is there any special reason? I mean, I'm definitely not an expert in the Portuguese market. I have actually no clue about it in terms of real estate. But I hear got a lot of good things. So, what's your view on this, Alias?
Yeah. I mean, well, absolutely. If you look at the data, if you look at the last 5 years, you can see that actually Portugal, especially Lisbon, Porto, are two cities that have grown in terms of real estate appreciation, probably the highest in Europe, or maybe they're in the second place or so. So for multiple reasons, there is a lot of demand going on in both Lisbon and Porto. Probably one reason is because in the past, the development was kind of slow. Secondly, Portugal is also quite attractive for, let's say, digital nomads, for also people who are coming at a later stage of their career, or for people who are enjoying the retirement in Portugal, especially from the Western world. So I would say that all of these factors combined created, let's say, a huge demand, and the supply it's still not able to follow. Also because the licensing, as you know, like in many other European countries, it was quite complex. And this, I would say, is also one of our benefits, because we have a very good team and we have a very good partner when it comes to licensing, because he's I think he has over 30 years of experience working with the city councils, so he really knows what is possible and what is not possible to do, which first of all highly, let's say, increases the profitability, because we can do the maximum development possible in each specific area, and secondly, we can do it very fast, or let's say much faster than someone who would, without this expertise and specific knowledge. So I would say that those are two also an additional benefit, although it's not directly tied to Portugal as a location.
Do you? I know, when you're a developer, right? It's always, you're juggling between a couple of things. You have a couple deals there. You need to have capital in those deals if you want to lock them somehow, and then be able to work on them. At the same time, you need to form a strategy. And before we go into any, acquisition of anything, you need to make an analysis. I know that there's a lot of data tools available today that maybe 10 years ago were not there. Is there any particular are you able to leverage this kind of maybe public, semi-private data processing, and maybe there's some AI involved as well in that? Is that something you do? Draw.
Yes, Dennis, that's a big question, because it's the first thing that we need to do very well. But if I can go back just a second, is I think what we are learning since 2017, after the first pilot, the first project, is that you have, in real estate, you have the fundamentals, right? You need to get the money, you need to get the license, you need to do proper construction, execute well, and promote it. That's the fundamentals. But then if you look closer to each of these steps, you can innovate a lot, right? You can disrupt every single step of it. And that's what we're trying to do. They will talk more later maybe about how to raise money and how to talk about. But in this first point, how to identify opportunities in how to search, how use technology, and that's a very important part of the beginning of our funnel, right? We have AI tool that helps us to scan immediately all the vacant properties in any given city, in this case in Lisbon, in certain locations. And then we are able to use image recognition to understand the state of that property immediately, and then get what Ailas was saying, the scoring. The scoring is extremely important. What scoring is? Okay, there's a property, all these listed, right? You don't find them advertised there for sale because they are, decades in the market, they are off market. So you find them with technology, and then you score them applying the rules. It's kind of a pre-simulation that will tell you what's the potential of expansion, how much can you know in area, in square meters. If you apply the rules of legislation, it's almost like due diligence a lot. You look at, for example, in Lisbon, our tool is telling us that we have 5,000 derelict properties. Then some of them are in the perfect locations. Then some of them have high potential to expand. So then at the end of the funnel of these 5,000, there are 10 top notch, right? Top notch because perfectly located, high potential to expand, and with the ability to get the license through because it complies with the rules. This due diligence, this search is fundamental, and most of the cases, I don't see too much technology, and that's where we started, right? We started, how can we use technology to improve, speed up, and identify faster and more with less risk, great opportunities. And then that we start negotiation, we start, talking with the board. There's a whole homework of, using technology to find what we think is the best opportunities in the market. And this also brings a lot of stress when you talk with investors because you have your done. And so you kind of, reduce the what you can do with it.
I wanted to maybe now shift maybe towards a bit the division of, you have this traditional funnel. You use novel tools to create it, right? To really be able to focus on the opportunities that really matter. And then from there, what happens next? I mean, you mentioned financing. Obviously, financing and finding core investors is the key part, I guess, because otherwise you can't move anywhere without it. And how do you do this traditionally? What happens traditionally? What's the process kind of like usually? Aliash, maybe you can take this one.
So basically, you have all sorts of. To be honest, it's very simple. So you have a project, you need to find the money. So where can you find it? It depends on a project. If you have a bigger project, obviously you're looking for investors that have a bit more volume in terms of investing. If it's a smaller, you can do it with a smaller investor. So basically what we do, it depends on a project. We try to set up a strategy to find or to provide this supply to the demand side. Now, the first few projects were financed with our own funds, which I think it's important because it gives credibility, and even it helps with investors because they know that we're heavily invested in it, we believe in it, and we put the money where our mouth is, in a way. So we're talking to funds, we're talking to, let's say, wealthy individuals. We're talking obviously to banks. Banks finance roughly 60 to 70% of the project, depending on a project. So the remaining 30 to 40% we have to fund ourselves. The Flipstone, as we have this policy, which is not unusual, to be honest, but it's also it kind of fosters trust, is that we always invest in each and every project to at least 15%, between 15 and 25%, so that we do have a skin in the game. So far, the projects were funded by, let's say, smaller funds, wealthy individuals, and also, let's say, smaller investors. But when we say smaller investors, because of the bureaucracy and because of, let's say, all the legislation that you have to, all the legal process that you have to do, contracts, due diligence, blah, 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 with in traditional investing, so that our current ticket size, minimum ticket size, is 100K. Because below that, then it becomes very messy, it becomes complicated. We use too much time onboarding each and everyone, too many meetings, and so on and so on. So this is also something, if I leap forward a little bit, that tokenization may provide a solution among other features, or let's say other advantages that we think tokenization will bring. One of them is also that we can then kind of decrease or lower the ticket size, or maybe you don't even have a ticket size, because the process is so, let's say, it's much more seamless, it's much more transparent, and it's much faster. So in that sense, even geographically, we are obviously usually most of the investors came from Portugal, because it's still in a traditional world, it's kind of a local playground. Although we do have investors internationally, and this is also something that we would like to address with tokenization on a, let's say, larger scale. But even though we do have, I think, Joao, correct me if I'm wrong, but we do have some investors coming next week from Germany. So we're trying to, let's say, expand our funding footprint beyond the borders of
Africa. Yes.
I think, like, from an investor perspective, right? No matter the ticket size, right? You're investing in expertise, right? And market access. A lot of times people, neglect this part, but actually, if you're investing, you want to invest with a team that knows what they're doing. They have deep expertise and knowledge in a specific market, and they're able to execute, because you're basically, in a way, entrusting your money into that deal going through, and you don't want, even if and if it will not go through, you want that that is as short as possible, and if it doesn't happen, you want honesty, right? You want to be able to trust and say, hey, well, let's do a different deal because this one is apparently not going through, and you don't want to be, the time part is also important. You mentioned, having this limitation ticket size of 100K plus, right? Which is actually fairly low for real estate already. Usually you would have ticket sizes of 200, 300K plus, I would say. So that's already something that makes it quite interesting for any individual, any household that has, could participate in a way, more or less. However, going below that number, imagine having 50 shareholders in the same SPV. That's already a big issue. So you want to create a new class of being able to have interest in that investment that has maybe not the same governance power over the decision-making process, because there's core investors who are in the deal and discuss how things must go. But then you might have a smaller ticket, which becomes, like you said, it could be $100, or it could be 500, or it could be 5,000, no matter. But it's fully digitized, right? And that's, I think, where tokenization can really kind of come in. And for somebody who wants to invest from a token purchase perspective, knowing that there's a whole capital stack setup that ensures that there's transparency and the deal can be trusted, because you're just a slice, just a portion in that mix. And there's a lot of other parties interested in the success of the project. You can really invest from sitting home behind and waiting for things to happen. But if we go back to the fundamentals of the deals that you make, right?
Mhm.
And this type of deals, right? What's usually the expectations from an investor? Let's say I invest 100K with your next deal. What could I expect?
I mean, obviously, the first thing that you would expect is the return. So basically, what will you get back in what period of time?
Exactly. So that's the
So-
simple question: is the numbers, right?
Absolutely. So those are the two key features. So if I, let's say, indirectly answer your question, if I go a little bit backwards, when Joao explained this, let's say, very meticulous process of selecting the properties, I think it's very important to know that we only include investors after we get the project approved, which means that at the beginning, you do kind of, I mean, we bear the risk, or our time or our investment into going through the funnel, do all the analysis, do everything, and so on. Usually it goes the way we sign like a pre-purchase agreement. We pay the deposit, which we finance from our own funds. In that time, we do the assessment. We submit the paperwork to the city council, and when the projects or the architecture gets approved, only at that stage we include outside investors, which means that you are not
Okay.
you're not going to be in a situation when bought a building and then you're not getting a license, which is in many countries it's often
That
one of the
happens a
main.
lot of times, yeah.
It happens a
Especially
lot.
in redevelopment projects, new development projects. There's a lot of times if you
Abs-
might be investing before all the permitting is done. So if that happens only after, and there's a lot of pre-work done, that's actually a really good and encouraging sign.
Absolutely, you completely sort of avoid the licensing risk. So usually when investors come in, obviously, yes, we do sign the contracts sometimes before, so that we know that we have the pledge, but we will not draw the money before we get all the paperwork, or at least the architecture approved, which means that then it's just a technical part of finalizing the permit. Now the second part, which I think is very important, is obviously the location. So okay, you buy, you build, you sell. So although nowadays everything sells quite fast because of the market conditions, we still do select locations that are sort of like in prime areas. Also, Lisbon, in comparison to some other cities, perhaps like Ljubljana, where we come from, doesn't have many plots in the center. So basically, there is no vacant space in terms that you can build here, you can build there. So the space is limited. So if you can snatch a good location, it's rare, which means that it can sell quickly. And I think we just started the pre-sale of our project number 4, I think, right, Joao? And we sold it free. Sorry, the project free. And we started the pre-sale, and we sold like 4 apartments within 24 hours.
Yes.
Which is
so
good.
4 out of 7. 4 out of 7. Stop the pre-sales actually, because we only wanted to test and learn how pre-sales work, and we had to stop it
And there was also, a thought that maybe we set the price too low. So, but anyways, what I'm saying, there is still high demand.
Yes.
So I think this is also important for the investor as well. And obviously, then you have the timeline. Also, what we do, it's like a mid-size project. So let's say this goes from like 7 to 20, 25 apartments. And these type of projects are, let's say, if I simplify it, a reconstruction and expansion, which means there was something there before. So you have, electricity, water, sewer, everything is already there. So you just do the construction. This construction is, what I'm trying to say is, it's quite fast. We can do the construction in 1.5 years, which means, or maybe 2 years. It depends on a project, but it's still relatively fast, which means that ideally, from the point that investor steps in and when he can be paid out, it shouldn't be more than 3 years. Nowadays, probably even less, because the market is so hot that, it's the selling period, then it can vary. But this is also one of the key features. Is, it decreases the risk for the investor, because you're not involved in a project that takes for 7 years and the crisis might come or whatever. And also, obviously, it increases the annual return, because you're getting your money back faster for some predefined or sharing agreement or fixed agreement, whatever do we have. Because in comparison, if you do try to build like a skyscraper, you have zoning, you have permissions, you have to sometimes change some city council rules or whatever. So this is something where we found the sweet spot, that kind of where we can get a good location. It's fast, let's say, deployment time. And also it's sold relatively fast, because we're not selling 500-600 apartments. It's 20, 15, 30. So it kind of goes very fast. So I would say these are all the benefits that I think from the investor perspective are important.
Yeah.
And I believe we tick all the boxes.
So I would assume, like, if the target timeline from the transaction till the exit is 2 years, right? Are we talking about 15% per annum, or are we talking about more 25? What's the kind of risk return for an investor, right? What is usually the case? I know it's hard because there's a lot of things that change. You have property prices changing. You have construction costs changing. So it's hard to say. But based on the previous deals that you've done, what was the outcomes usually in a simple percentage figure?
Maybe I can take that one. Look, I think there's always, project by project, because this is project finance. So every project has, is financials, I would say. But on average, we are looking at IRR on these projects around 25%. So it's a low volume, low ticket size, or low investment in the real estate world, high margin, right? That's the business we are in, right? It's difficult to get it out, but we get it out and licensed, invite investors, as I last said. And this is high profit, low volume of type of business with a fast turnover. We might look at 10 to 15% net return per year for the investor, the fundamentals of the project, right? There are projects that might be more profitable and we can offer more. There are projects that be more, streamlined or with less margin, but it's around this, right? It's also, to be honest, we are in the initial phase of our, because 6 years, it's not terms of attacking this niche and this segment, this specific rehabilitation in the city center, which means that we are also able to offer, and we want to offer, better conditions to our, let's say, early investors, because intention is to actually retain investors, right? Is really providing an excellent service, an excellent return above average. Investors, continue and spread the and continue to invest with us, right? So that's also a little of, I would say, a normal stage we are in, offering better rates than normal because the projects allow in terms of profit, but also because we want to scale up. And we do know there are many opportunities in Lisbon and Porto. So that's it, right? So maybe 10 to 15% here during these 2-3 years is what we're looking at.
I think that's, I mean, why I'm asking this simple figure is because, looking from the tokenization perspective, from the DeFi crypto perspective. So past 3 years, there were markets in crypto where there were these lending protocols, right? Or they're still present, right? But you could simply lend your money and earn 7, 8, sometimes even 12, 15% APY on your stablecoin, which is a US dollar token, right? And you get it's outstanding return that no bank would, return in these times. And that was because there was this juiced up yields that were juiced up with this, nicely flavored tokens, let's call them, right, around. And it was basically bribing users to invest money in various protocols. And it's hard to compete with real estate when you have that competition in the DeFi market, because if you're like, well, you're going to lock up your capital for 2 years and you're going to get 10, maybe 15% per annum. And the competitor is you can unlock at any time and you get the same, right? And so I think that was an environment where it was really, really hard to come out with, with products and projects like Flipstone. And fortunately, or unfortunately, this is not there anymore. It doesn't exist anymore. It's never going to happen again. It was there, it was nice, it was fun, but it's not going to happen again. And from now on, it's back to normal fundamentals, trying to find yield where there's actual yield, trying to find real yield, right? And now, so it comes down to the timing, why going into this now versus a year ago. And I think that's a very important fact that most people maybe haven't seen was there. But I believe that with your product, you're going to find quite a lot of traction when offering it a participation in a tokenized form, because now this is something that's really needed. There's a lot of capital in Web3 on chain that doesn't have any yield near this one.
That's true, and we
I'm
are
sure will
in a way happy.
Just one comment before Ilas goes, because I know as this editor, so I just want an introduction because of risk and volatility, right? That you do have perhaps in crypto, and what we are offering here, because of the model itself, is extremely low risk for the reasons that we explained before, right? Because the licensing risk is not there, prime locations, cities in Europe, in this case Lisbon. So this function of risk, but also there's a of diversification, I guess, right? If you want to hold real estate in these nice locations, even if it's not to sell immediately, that will some complementary, less risk, more diversified options to your wallet and to your portfolio. Alas, I'm sorry, I know you love it, so go ahead.
No, yeah. So, yeah. What can I say? So, in some weird way, we're happy this happened, although generally it's not a good thing. But if I go back just as an example, I mean, you're obviously right. If you do have sort of like investment that give you 25% or whatever, 30% annually, and you can exit anytime or so on, obviously it's very difficult to compete with that. Now the reality is that this never lasts for long. I mean, the DeFi and crypto that you mentioned, they were not the first instruments. You had different, not crypto obviously, but other investment before that they were offering 20, 30, 40, whatever percent they were, but they all have one thing in common. They never last, because obviously on the other side, no business can really sustain 30, 40% interest rate. Or even if they could, usually their fundamentals are strong enough to get a cheaper financing. So nobody with a business that is strong, that could survive 40% interest on the financing part, won't pay 40% because they will get a better option. And the ones that don't have a better option, usually the ending is not happy. Let me put it this way. And we believe that, as you mentioned, there was a lot of wealth has accumulated in crypto over the past few years, or the past decade, actually. And what we believe is, or where we see our opportunity, is that I assume that many people that now have this wealth in crypto would like to diversify it. Even, from the portfolio perspective, maybe somebody invested a few K or a few 10,000 euros years and years back, and this is now 200, 300, a million, I don't know, or a billion if you were a very lucky one. But, suddenly your crypto portfolio is super huge in comparison to your other assets. So what we also count on is that there are individuals or companies perhaps that would like to diversify a part of their crypto assets, and we can offer real estate. Real estate, obviously, it is one of the, let's say, most common asset classes. Especially they're quite. I mean, obviously you have fluctuations, but in comparison, especially to crypto, they're very stable. So which means you can build like a foundation there. So this is besides the all the benefits the tokenization has in terms of sort of ease of transaction, no ticket size, and so on and so on. We also count on the fact that there is a demand for diversification from crypto into real estate. This is something we can offer, and the tokenization can offer like a seamless transition from one to the other. So this is also one of the main reasons why we're having this chat today, actually, and why we stepped into this area, and why we are launching our own platform.
So now going a bit, we discussed the background, the whole thing. I wanted to use the last couple of minutes we have in front of us, just to go. Maybe João, you can help us, show the team. I think that the team behind a project is what makes it or breaks it, and I'm gonna bring up a bit your presentation deck. So we went through the vision and that part, but I really wanted to go and check the who's the people behind Flipstone. Can you tell us a bit more? We've obviously learned about you, João, but who else is in the team? Just as a quick overview.
Not alone. Yes, I'm not alone. So look, the team is the most important thing, because without great people, without the right skill set, nothing happens. And so we have spent a lot in this team, and we understood that you need all the skills in house to be able to manage the projects end to end, right? So we started by, first of all, 3 of us that you see here. Although we don't have deep expertise in real estate, we do some projects, in the past decade. But what my, let's say, managing partners, Hugo, Rosa, and really know well, first of all, is the market. To us, myself and Hugo, we know Lisbon inside out. We are from Lisbon, and Rodrigo, Porto, right? So this is important. We know the market. We have access to the market. We understand the market. Is our experience in leadership and project management, in corporate world, across countries and across cultures, with complex projects. Because real estate, that you want the SPVs to deliver in a disciplined manner from purchase to liquidation, in a disciplined PMO, right? In really strong, collaborative, agile project management, so that you keep in the timeline, you keep the budget, and you keep the profitability. So project management perhaps is what we can bring to the skill set. That is one part of the that we need in an integrated developer. If you go to the next slide, then you need something else, right? You need to have your verticals, your expert matter, your subject matter experts in each of the components of any project on buy, build, sell. You need funding, right? So Miguel Soro is the partner of equity and finance is a economics and is really banking and investment banking and a lot of experience on raising debt and equity. So this is fundamental, as you said, then is in the beginning, capital intensive business. So we really need to know our deal there. We need to be able to secure the things to the team. The second thing you need, if you have the money, is you need excellent, right? You need excellent architecture and engineering projects. You need to design very well, and you need to know the city council and the other side to get those projects approved. Tiago Silva Dias, with more than 40 years, an atelier of engineers in Portugal projects, and now he works with us, and they are all, equity stake in Flipstone, right? So this is what Tiago brings: is the project design and the licensing. Then, obviously, if you get the money and you have the project approved, you need to execute, right? The construction, you need to execute. And that's what Gonçalo brings, right? His company has more than 100 years constructing in Portugal, but he is also importantly, his job and his role and what he brings to the team is to managing the third-party construction companies to make sure the selection is proper, the negotiation, and then you have the supervision during the construction, which is in itself extremely important. And that's what Gonçalo brings as of construction, let's say. The last but not least is right. You need really to know to commercialize, promote your products, and that's Miguel Keita brings a lot of experience from real estate intermediation. We are building, and we have, and now we use mostly our direct to consumer, right? So what Miguel brought is, let's say, designing a go-to-market directly to consumers, so we can know our consumers, we can understand, we can, with the digital, let's say, tools that exist, we can get it to the market and not necessarily through agencies, a bit of the traditional model, right? So this is the team, 3 project managers with very strong leadership and PMO experience, then the 4 verticals that we need to get the projects going to each stage and deliver at the end. So this is the team, let's say, leadership team of Flipstone.
And now there's as well this innovation part that you're going into the digital section with, I guess, Aliaj joining the team, first being part of Flipstone from an investor perspective, now as well in a more executive function. Aliaj, where do you see now this kind of the next few months going towards? Let's say, you go on a Launchpad. Obviously, you could have started it without the Launchpad, as we discussed, but the additional kind of exposure to get Flipstone known within our community is, I think, was the priority as well on your go-to-market strategy. But going from here on, where do you see things evolving?
Well, absolutely. I think that, as you already mentioned, we kind of selected this path through Launchpad because we would like to introduce ourselves to your community, because we believe that if community sees opportunity as an opportunity, obviously this will help us later on in terms of relations. Maybe even some investor might come from that same community. So this is the reason why we decided to go for Launchpad. Obviously, it's let's say a new channel for us. Obviously, we're not, although we do know something about crypto, we don't know something about communities, we don't consider ourselves an experts. Why we're doing it is we do believe that, in the future, maybe not so distant, tokenization might play a very important pillar in real estate transactions, financing, whatever we call it, ownership. And although we're not the first one, we still like to believe that we're getting into quite early. So we would like to start, we would like to learn, we would like to grow, to improve. So in a nutshell, I wouldn't say that we now expect that we're going to raise 10 million next month. Probably not. But we would like to start small. We would like to build, connection with community, build our presence, and then slowly grow from then on. Our aim is to tokenize 2 properties, let's say within the next 12 months or so, maybe more. We'll see. We'll tokenize 1 within the next, I don't know, 3 to 6 months, and then we'll see the response and then adjust according to it. So basically, we would like to be a part. We would like to be a part of this community. So this is why we're here.
And moving forward, we talked about previous deals track record that you guys had so far. Joao, I know that you wanted to kind of highlight maybe one project at this time. I think we're talking about this project here, or no? I think it was it this one? Am I correct? Just so
Yes.
that we give a sense of understanding, a feeling what type of assets what's the output, what are people already investing in the deals that you make. Can you tell us a bit more about this one, for instance?
Yes, true. This is our, I think, number 3, the one Ailas was mentioning before, that that was a really quick pickup in terms of pre-sales. But we chose this example because I think we are building products that are a bit working on the scarcity type of thing, right? It's high-end apartments. What you see here is a building with 7 units that is not ready yet. So it's like 30% fraction. This is like when it's done, right? The 3D model. But what there was actually, 1 floor abandoned old building that was actually a problem even in the neighborhood, etc. Right? So is this transformation? We don't have here the before. This is the after. High-end, but also unique, right? Unique because since it's not big construction in the outskirts of space, and you do a lot of single units. So we try on this uniqueness, high-end products, apartments of, let's say, 1, 2 bedroom apartments, small units that are almost impossible to find, especially new construction like this in the center of Lisbon. This is the old. So and the building, the previous building was there for more than abandoned, and so this is what we do, right? This trying is building these high quality residential apartments after the transformation of something that is not used and it's abandoned. What you see, and then the process is we are learning that is mostly either young professionals or these digital nomads or expats that come and want to live center, or even local demand that was living outside the city and wants to move in and closer to where they work, or closer to, this case is very close to river. You actually have river view on the top. So this is what we're trying to find and then transform. And this is an example of the product. This we are increasing it because this is 7 apartments and this 500 square meters, 560 in this case. It's still a little bit small from an economy of scale perspective. So we're trying the next project, not seeing today, but will be posted in the platform. The Almirante Reis is a bit bigger, 27 units square meters, because that's also allow us to go into getting some efficiencies when it comes to capital raising, but also construct economies of scale, right? So this is fantastic in the quality, but we are increasing a bit the size for that reason.
Amazing. And then, are you usually doing one at a time, or is this something that overlaps? Because the time frames might be different, the acquisition times might be different. So there's things happening in parallel, I would assume, all the time. Correct?
There's a lot of overlap. So today we have, I would say, we have 5 projects running simultaneously. 2 of them entering now commercialization, 2 in execution, and 1 in licensing. So what we are trying to have is a pipeline also of, as you are showing now, are new projects that we are now funding, and so we are trying to get this balance right between turning over the previous projects that are completed, but making sure we have a deal flow in the pipeline out that we said before, right? You see here 3 next projects that we are actively funding. You see 4, but I would say the first 3 with a total equity at stake of 9 million, Almirante Reis, Alexandre Braga, and then Alexandre Herculano, 2 in Lisbon, 1 in Porto. And these are the ones that have qualified, right? Out of the hundreds of such, etc. This is the ones that we either already signed the contract of promise to buy, or we are about to, but the work is done. So we know this is, in the expression, filet mignon of the city center level with high potential, right? This is a bit our
which is actually good, I guess.
can.
It's you need to have open opportunities all the time. You need to work on those because you have investors in your previous projects which are about to exit or have exited already, and providing new investment opportunities is a lot of times the best option for most investors to just roll over the capital to the next one. And especially if you're achieving growth that we mentioned before, that capital is just multiplying and multiplying. And I don't know, in 3 years, you're going to be building 3, 4 deals, or maybe even more at the same time, not just sourcing them, perhaps. Then the question becomes, out of the thousands of deals, is there enough meat for the filet mignon? But yeah, I know we were talking about Lisbon as an opportunity, and I know you have this slide you showed me just before we started streaming, and can you tell us a bit more what this actually represents? Because I see, some points I see, the Lisbon as a part where there's certain opportunity there, and it's part of your analysis, I would assume, or the outcome of it.
Correct. So this is actually an updated, almost real time in Lisbon. What we get out of diligence, right? We started with a tool that scans 5,000 properties, then 100 qualify, and then if we get to the top 10 means what? Top 10 means the ones that if I would have capital, I would acquire them. Right? Now, then there's a second question. So the 3 that we saw before are included in these 10 spots here. Then the question is, we need to also consolidate. And I know the hockey stick. I'm a big fan of literature tabs and how you can explode, but we need to also make sure we are not moving faster than our own capabilities to execute properly, right? So we really need, one thing is to show the size of the opportunity. For example, there's 130 million investment we could do in this, but out of those 10, the best 3 that we are able to execute with risk of having too much on our plate is the 3. We have kind of a growth algorithm. We would like to double acquisition rhythm every 2 years cycle, because we in our own projects, and I think this is a very good symptom. As I said before, we want to invest as much as we can, as much, almost 100% profits is to reinvest in the next opportunities. This gives, when we are talking with investors, be it small investors or big investors, is saying, look, it's a 3 million equity at stake, I'm going to put $1 million, and I said before, where the risk is high. So this brings a credibility because the team is invested on their own projects, time, but also capital-wise, right? So yes, the opportunity is big, because one of the interesting questions I asked has been here even before this was Flipstone, consulting and trying to challenge us in many multiple fronts. Tokenization is, but there was a question that Alas was doing to me. Is this repeatable? Because when you go into rehabilitation, you might think, okay, are there opportunities or is this exhausted, right? Because it's a 500-year city. Are there many things in the market? And this is just to give us, first to us and then to investors, there are opportunities out there. There are very good opportunities out there for the years to come. And so, but then how many to execute? It needs to tag along your capability to execute, right? We learn tremendously, right? It's almost like every project is a pilot. Then you optimize, learn what works, you scale up, what doesn't work, you fix it, and you try to improve next time. So this is very important to go step by step and not confuse the long precipitation to make sure we deliver to us and to our investors.
So focus is, out of the 10, let's do 2, 3. Focus on those 3 because those 3 are the best part of the filet mignon, and I'll execute in a very high quality manner on those 3, not expedite deal flow just for the sake of doing more. So basically, in a nutshell, you're not greedy, but you're doing things properly. So a balanced approach to your development efforts, which is actually quite encouraging for any investors, because you want to have a team that can really deliver on what they have on their plate and not spread themselves too thin, because then the risk just of making errors just increases, right? And things going wrong.
Right.
It was a great, I think, episode. I hope whoever's listening to us finds value in it. Whether you're part of our community, maybe you join in the Launchpad campaign, or you don't, or you're just somebody interested in real estate in general, just trying to understand how a local real estate developer in a niche market thinks, and how it structures its business. I think that was quite a good conversation. Alias, is there anything that we might have not covered in our conversation that maybe I forgot to bring up? Anything like that?
I'm sure we did. I can't think of any right now, but
Okay.
I think we covered a lot. We will be also present in all the group channels, communication. So if there's something that we forgot, we will share it later. If somebody has some questions, we will answer them. So I would like to thank you, Dennis, for inviting us so we were able to share our vision, share our story. So thank you very much.
Thank you
Thank
so
you,
much.
Alias,
It was a pleasure.
for coming. Thank you, Joao. Yeah, go ahead.
Just to thank you guys. We are super excited to be, if the word is correct, to democratize a little bit the access to that we have, and that we feel like a bit of a selfish, that we are not able to to make them to any big, small investors. I think democratization is the word that has driven myself also to embark in this journey with you guys. And so thank you so much for the time, opportunity. I hope there's interest, and we are here to show what we have, work with anyone interested.
Like I'm very excited about Flipstone. The main reason, the core reason is you have a track record, you have a traditional process in place that works. It's built on fundamentals, so there's a lot of quality around it, and you being open to that future where tokenization might be just 5% in a deal today, but maybe in the future becomes 15%, maybe becomes 20%, maybe it takes a bigger slice of the opportunity. Maybe it replaces on one end totally the senior debt tranche. I don't know. Maybe in the future there's a stablecoin issuer who says, why don't you come to us instead of a bank and we'll provide financing? Maybe that's a future that's possible. But it's the small steps that we're taking now that might drive or lead towards a future like that. I'm really looking forward to your campaign. I'm sure it's going to be successful, and I'm looking forward to your first deals because I'm already signing up, and it's not investment advice at all, but I like what I see for myself. So you definitely have one on-chain investor here. So.
Perfect. You're very welcome.
So
All right.
that's for sure. And well, see you next time. I'm just gonna say bye to our community before we close up the episode. So thank you again, Elias and Joao, for coming to the show.
Thank you. Take care. Cheers.
Thank you. See you soon.
So it was Flipstone this time with us. I think it was an amazing episode. I think we learned quite a lot, and it's great to see more and more serious companies coming towards tokenization, and not just thinking about whether to use it or not, but actually executing on it, actually making making the essential steps of doing a decision and saying yes, we want to be in this market, we want to help it grow, we want to help it evolve. So till the next time, I guess, and thank you everyone for watching. Please follow us, subscribe, share what we do with others. I think there's quite a lot of things that can happen positively in 2026, and till